Guys, on today's episode, we were talking about buying a restaurant. How do you figure out how much you should be spending to buy a restaurant in your market? And how do you come up with a number to sell your restaurant? The fact is, there are two very straightforward ways to do this. So whether you're an aspiring restaurateur or you have a couple units and maybe you want to sell one off, I think you're going to find a ton of value in this episode. If there's one lesson I ever have to teach anybody about owning and running a restaurant, it's pay your sales tax and pay it on time and accurately. My restaurant in 2010, we had a nightmare on our hands. It cost us $180,000. We paid back every dime and almost put us out of business. That's because we didn't file the proper sales tax, we didn't file them on time, and we didn't pay them on time. And we were so busy and unorganized and focused on, head down running our business that we never looked at any of the stuff from the state, and it got real scary real quick. So that's the number one lesson I share with you guys. Pay your sales tax. And you want to do it real easy, real simple? DAVO sales tax. I'm telling you right now, it is the number one no-brainer. Any client I have, anybody I remotely know who's opening a restaurant, before I talk to them about anything else, I tell them to sign up for DAVO because they hook directly into your POS. You do your business all day long, right? It pulls your sales tax, says this is what you owe, takes it from your bank, and then pays it for you monthly, quarterly, whatever you have set up, and then that's it. You don't have to worry about it. You can go back to running your business. You can go back to enjoying what you do best. This is not why you got into the restaurant business, is to calculate and pay sales tax. Yeah, sure, your accountant could do it, but they don't even like to do it. We had an accountant, he didn't do it. So here's my thing. Go to the website, sign up, takes 2 seconds to sign up, and at least talk to somebody. Figure out if this is gonna be right for you, but I'm gonna tell you right now, if you listen to us, if you listen to Sean's show, the fact is every client, every person we talk to, we recommend DAVO because it is such a no-brainer. I tell them all the time, I should be a salesman for you guys because I'd walk into restaurants and be like, just sign this. You wanna never worry about sales tax again? Sign this. So DAVO sales tax, the link is in the show notes. You guys check them out. It is a no-brainer. Never worry about sales tax again and go back to doing what you love.
Hey everyone, Avi Gorin, CEO and co-founder of Marqii, and I want to talk about the customer journey for a second. You never know as a restaurant owner where your guests are truly coming from. End of the day, we do see some patterns around two types of search behaviors, direct versus discovery. Direct search, for an example, would be jumping into Google and saying Cali barbecue hours, right? I know where I want to go to eat, but I'm missing a key detail. I need a little bit more information. Discovery, which is the bulk of searches, is barbecue in San Diego, restaurants near me, takeout near me, right? One of the best ways to be found for more discovery searches is leveraging keywords. Reviews are basically free content for you to leverage. Think about keywords that are relevant to your brand, your location, and include as many of those in your review responses as possible, right? How can you go about doing this? Let's set up reports, utilize tools like Google Trends, find out what's going on in your area and how you can help leverage these keywords and review responses because someone else is doing that, right? If you need some examples, you could do anything from including summer menu, gluten-free menu, leverage specific menu items like the dreaded and beloved spice pumpkin anything in your review responses, right? Let them know what's coming. Let your reviewers know something they should come back and try. And of course, if all of this just seems overwhelming and daunting because you're already running a restaurant and have enough on your plate, just leverage the team at Marqii to do this for you. We handle all of this. We're experts in this space. We can automate this so it's just another item that you know you are taking care of. Again, that's marqii.com, marqii.com. No you. However, we did recently buy marquii.com, so if you do misspell it, we got you. You'll still find us. We can still help you.
Guys, welcome back to Close Monday. I'm your host, Kyle and Sarah. Thank you for joining me again. If you've listened before, if it's your first time, where the hell have you been? Like, really? You've been around for 2.5 years. You're just checking us out now? I mean, let's go. You got to get on it. We're talking about buying restaurants today. And I think the biggest challenge that I've seen with restaurants that are for sale is the valuation and coming up with a number that makes sense. You guys know, if you're in the market or you've ever been in the market, that a industry standard for valuing a restaurant exists, but it's often ignored. And what I hear most of the time are people being like, I just want to get out of this what I put into it. I mean, it's great. That's what you want, right? That's what the seller wants. But the market's going to dictate the price. And if you're going to go out at a number that's completely insane, right? I put $600,000 into this restaurant. I need to get at least $600,000 out of it. Unfortunately, that's just not the way business works. And it would be great if that's what it was, right? There's no risk. Your time would be the risk. But there's a financial risk to opening up a business. And if you invested something and it did poorly, or if the seller that you're looking at spent a ton of money to redo the place, looks great, but he's not doing the business, then the value has gone down, right? Unfortunately, that dynamic should be pretty simple to understand. There are some formulas that eliminate all that, right? Or most of it, and will give you the true value of a restaurant in a market. So let's go over. I took some notes here, so if you're watching on YouTube, I got to look at my notes. So let's just start with the type of restaurant. If you're buying, let's say, I don't know, ABC Clam House, it's been in your market for 1,000 years. They're always busy, and the guy's like, you know what, I want to sell it. You can run the Clam House. You can do whatever you want to do. I don't know where I came up with the Clam House name, but I think there's a clam broth house in Hoboken, made me think of that. But you're going to run the name. You're going to run the business with the name. You're going to get the IP, all the intellectual property, the website, the social media, all the goodwill of being able to open basically without ever having to close. That's one situation, right? If you're buying a restaurant, sit-down fancy restaurant that just didn't make it, or a casual pizza place that never quite turned the corner, different values, the types of furniture and equipment, the FF&E that are in the business. Are they included? Are they not included? What shape are they in? Are they valuable to you? Right? So two different things there. Are they valuable? Is there a dollar amount attached to them that's meaningful, that justifies something? Are they valuable to you? If you don't make pizza, then you don't need this $50,000 pizza oven. Get it out of here. And of course, does the owner own the property or do they rent the property? That's another big one. And it should go without saying that the location, prime locations will fetch a higher price. We've debated that on this show a couple times. But location, for the most part, does matter when it comes to pricing. Okay. Other variables that I would say weigh into this are the owner's sort of need to sell or eagerness to sell, and really the state of the economy. Like, what's the economy like? And I can tell you right now, for a lot of clients that I have, we are getting sites that are off market with phone calls that my team has placed to owners and asked them if they're looking to sell their business. It's not an offensive question. You guys got to stop. That's a little side note. When we call you and ask you if you're interested in selling the business, even if you're not, just say, hey, not right now. I'm doing well. Because I guarantee you, because I've been in your shoes, there's going to be a day. There's going to be a day that you're going to say, damn, what was that guy's number who called me about selling the restaurant? It may not be that day. Completely understand. I don't have a problem. I'm not forcing anybody to sell. I don't want anybody to sell who doesn't want to. I want you to be in the business and love the business. But there's going to be a day where you want to sell. So don't get angry at us when we call you. That's it. All right? It's a little rant. Now, if you go online, you guys obviously do this all the time. I do it myself for my clients to look. I look at businesses on sale, for sale. Biz by sell, Craigslist. Facebook Marketplace even has restaurants for sale. You're going to find restaurants that are for sale for $100,000 or sometimes less, and restaurants that are for sale for $1 million or more. But what you need to know when deciding if that's even, let's just say you decided that you're looking in this ballpark of, I don't know, $500,000 to buy. That's what you have, and that's what you're willing to invest. You need to do some homework in your market to understand what has sold in that market. And in terms of similar restaurants, obviously, because you want to do a comparison. And you want to know the numbers that they do, right? It seems pretty straightforward, but it's often a challenge to get over that hurdle, believe it or not, to get the real numbers from people. A lot of you guys don't do your books, which is fucking crazy. Crazy you don't do your books, particularly if you're trying to grow. Spend the goddamn money and get an accountant that can do your books. I mean, what else? What other choice do you have? There's going to come a time when you need that information in a timely fashion. And if you don't have it, you're going to lose that potential investor or sale, whatever it is. So I would say of the methods that are out there, like we said, we're going to discuss two. The most common is looking at the gross income. So typically, restaurant owners and investors will aim to sell their business for about 25% to 40% of its annual sales or gross income. Okay? So if you had a restaurant that did $1 million a year, depending on the shape of the restaurant, the condition that it's in, what it's included, those restaurants are going to go for about $250,000 to $400,000. That is just a benchmark. That's where you can just kind of back of the napkin understand when you see a price, hey, does this even make sense? And that's a fair way to do it, but it's very important, critical. And I know that this is what you guys talk about because I hear it all the time. You have to distinguish between sales and profits. Nobody cares how much money you do on the top line. Everybody cares how much money you drop to the bottom line. In fact, according to the National Restaurant Association, food and labor costs, okay, each consume about 33% of every dollar in sales. So combined, 66% of that income is going to go to your labor and to your cost of goods for the independent restaurant. Other costs like rent and utilities add up to about another 30%, leaving just around 5% of potential pre-tax profit. Okay? What I just said there needs to be roll off your tongue. This is how I value your restaurant, period. Once you say that, you're going to give the buyer, rather the seller, whatever side you're on, say, they're going to give you numbers. You're going to run through them quickly. And then you're going to say, hey, man, I'm going to need to see some proof of all this stuff. Tax returns, P&L, balance sheets, bank statements. How are you doing right now? We're 6 months into 2024. What you did in 2023 may not be relevant. So you're going to want to start that conversation there. This way they know you know your shit. Period. Another method, before I get into that, do not take Excel sheets. Okay? I repeat, do not take Excel sheets as proof of financial worthiness. I mean, that's obvious. Anybody can write whatever they want on an Excel sheet. You want to see tax returns. You want to see something from QuickBooks. You want to see an accountant report. Something that is up to date and accurate. And if they're not, you just got some leverage. That's a whole other show, probably. But understand the percentages and understand what you're going to value it on based on what we just went over in terms of gross income and the percentages. Now, independent restaurants have different setups, and a lot of owners will take a salary and then use some of that money for their car payment, for, repairs and maintenance, on that car, insurance on the car, dry cleaning because they're the front of the house, whatever it is. When you're calculating a restaurant, considering that's called SDE, or seller's discretionary earnings. So they take a small salary, and then these other expenses, they don't take into their pocket, but they're paying with the company. So when you're valuing the business or attempting to value the business, you're going to realize that number, whatever it is, let's say it's $2,000 a month, represents a piece of the net income. Okay. So there are other things like depreciation, amortization, interest expense. Those all get added back in. This way you can sort of do an apples to apples comparison, right? Because if you're doing one comparison based on the sales minus the expenses and the net income, and another one straight on SDE, you're going to have two different numbers. So to estimate the value of that restaurant using the SDE, you're going to multiply that value by some sort of industry multiple. Let's just say 2. For restaurants, on average, I would say that multiple is typically 1.5 to 3. I always go with 2 just because it's easy. I think 3 is a stretch. I'm not sure we're there for most restaurants. But when it comes to the multiple, that's the negotiation. Really, that's the price. So if the guy's dropping $100,000 to the bottom line, whether it's SDE formula or the income formula, you're going to say, you know, now you have that number, right? It's $100,000 for each. Is it worth $200,000 or is it worth $300,000? Well, what else is included? That's where you go back to the other stuff. What other assets are included? Do you own this property? Is there any growth potential that you see that they don't see or don't care about because they're retiring? That would increase the multiple for you in your mind, right? It's all negotiation. But if there's less, right, now you're in the market. That's what I said before. Go and do your research. Find out what's sold and how much and what was included. Being armed with that is going to come in extremely valuable now because if there's less assets, the risks are higher, you might have a lower multiple. So there's an example here. I'm going to run through the numbers. For example, let's say you use 1.96 for a restaurant that has an SDE of $100,000. Well, that's going to sell for about $196,000, right? But if you didn't do the SDE calculation, right? Let's start with the sellers right now. You didn't do the add backs because you took it in cash or some other bullshit that you pulled. You're going to get a lower number. No one's going to want to hear your story about, oh, well, no, I took $5,000 out to take my wife on vacation and, you know, I pay for this, that, and the other thing. Show us, prove it. Then we can help you get to that number. You want 196? I'll give you 196, but I need to see it. It's where it goes back to all the time. Pay the bookkeeper. My next episode is going to be pay the bookkeeper. Pay the bookkeeper to keep you up to date and you review them every week, period. This way, when you know that you need them, you say, hey, bookkeeper, where are we at for the numbers from last week? You'll have them on Wednesday. Great, thanks. Boom, here they are. How do you run a business otherwise? I mean, we've talked about a number of times. But let's put this into perspective. So imagine you're interested in buying a local restaurant, and it's called Steve's Steaks. And when you look at the listing for Steve's Steaks, the annual revenue and the SDE, okay, I'll give you a breakdown. It'll say gross sales, $624,000, SDE, $150,000. So using the sales multiple method, okay, $624,000 times 0.4 gives you $249,600. Yeah, I'm looking at the math right here. Got to. Can't do both here. And if you use the SD multiple method, 150 multiplied by 1.96 gives you 294,000. The true value of the business will likely fall somewhere between those two numbers. That's just the way it is. But you need the numbers to be accurate to be able to do them quickly. So I'm going to create a spreadsheet. I think if you guys are interested, let me know. That will show you exactly how to do this and how to run these things so side by side, so you can just kind of bang them out when you're looking at them. Of course, these are just estimates, right? They're nothing set in stone. The location and the equipment, like I had said, will always come into play. But now you know exactly what you need to be looking for. Okay. Make sure you understand when you sit down with that person, like, hey, I see these numbers here. Let's say they even give you numbers, right? I see these numbers here. Are you guys taking anything out? I see this number here says owner's draw $60,000 a year. And like, oh yeah, I take out about $40,000. Oh, where's that? It's right here. Okay. There you go. Now you're just negotiating off the multiple, and you're using your market knowledge, right, to figure out if that's what it's really worth. So, common questions. Basically, the most common question is, this restaurant's for sale for $500,000. What's included? And I could just start a restaurant on my own from there, for that cost. Can you though? What does it cost? That's the question. What is it going to cost me to start a restaurant brand new? Well, A, can you find a space like this? If the space is just a throwaway, yeah, then forget it. If the number's too high or it's too close or making you feel uncomfortable, go look for another space. Call somebody else, see if they'd sell their restaurant. That's also part of your market knowledge. You're going out. While you're trying to figure it out, ask them if they're interested. Now, again, this is all if you're going at it on your own. But if you're working with a broker and they don't tell you this, call me. I'll put you in touch with a broker that can help you out. But according to restaurantowner.com, the average cost, and I can tell you here in the New York market, this is way low for starting a restaurant, full service, right? From scratch, is about $475,000, $475,500. So unless you guys have that money in your bank or think you can get that loan from the SBA, got a rich uncle, see if you can make it work, right? But if you don't, then you have to figure out oh man, maybe that guy's right. That number's pretty accurate. So again, understanding what trades in the market and what it's going for. Now, another question was is how open is the seller to financing this deal? Will he hold a note? Will he hold some paper? So in seller financing, the risk to me, if I'm representing the seller, the risk is that you might get the restaurant back. How well do you know this person? So I'm going to need more information from the other broker. I'm going to need more information from them saying, hey, I need to know who the guy is. He's willing to offer 75% financing with 25% down payment, but he wants to know who they are, how much money they have in the bank. He's going to read their online reviews, going to check out their social media, just like a landlord would do. Because in that clause, it's like, hey, if you don't pay me, in that agreement, rather, there's going to be a clause that says, if you don't pay me, I'm coming back in, which is all well and good unless you don't want to come back in. So that's the risk to me on that. I don't want to be too quote unquote in bed with anybody. I don't want my clients to be in bed with them if they're not comfortable. So you guys got it? I know this is a little bit longer than I wanted to be, and hopefully the numbers kind of make sense. And maybe I'll do a little video about this. But buying a restaurant there's a lot to consider. Really, there's the calculations that we spoke about, but it's also understanding the market. And once you can figure out how to calculate using the SDE methods and the sales method, you're going to get a much clearer picture of a restaurant value. And then remember, above all, the asking price is just that. You can ask whatever you want. They can ask $500,000. There's a story right now, playing out right now. I'm talking to the guy today. A restaurant was for sale for $750,000 a year ago. I called the guy last Thursday. He's willing to take $200,000 for it today. So, what happened? What changed in a year? He was overpriced, and everybody knew it. Now he's feeling the pain and wants to get out. There's always room for negotiation, and you'll never ever get what you don't ask for. Definitely not what you don't pay for. You won't get it. But if you don't ask for it, you're never going to get it. All right? Thank you for joining me today on today's episode. Hopefully that gave you some clarity on the buyer side and on the sales side. Don't be afraid. Don't be afraid to have the conversation. If somebody's really interested in selling and they throw out a number you're not too happy with, ask anyway. Make it make sense to you. See, maybe you're missing something. Maybe they're overpriced. But if you're really interested, go in there, get the facts, and make an informed decision. Don't just guess. Try that again. There's always going to be another deal. Just know that. There's always going to be another deal. So don't be so quick to jump into something if the numbers don't make sense. All right, guys. I'll see you next week. Thanks.